Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Ian, welcome again this week. How are you?
Good day, Don. I'm very good, thanks.
Excellent. Today should be a bit interesting. I will be curious to get your opinion on a few things and go through your press release. But before we do so, making money in stressed capital markets situations is tough. Typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address $39 trillion of debt, contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Today, Ian Reynolds is here from Siberia Capital to go through his latest press release. Ian, you mentioned anticipation builds. Can you please expand on that, please?
Sure. Well, we kind of forgotten about the war in Iran a little bit, i.e. it's not escalating at the moment. We haven't heard even any rubbish from Trump recently, I don't think. Well, it seems to be heading for a long-term ceasefire, put it that way. So markets have taken that as we can move on to something else. Many other things, of course, bubbling underneath, but the nearest and biggest thing for markets is the SpaceX IPO.
Right.
Which is
amongst
due on
several
the
other IPOs.
12th of June. Yeah, I mean, there's a whole load in the list, but the current record IPO is Saudi Aramco's in 219, which is 29 billion. They raised at 1.7 trillion valuation. SpaceX is raising, supposedly, because of course they haven't filed the prospectus yet, raising 75 billion at a $2 trillion valuation.
It's a big number. There's
a lot of equities, a lot of value hitting the streets. And what the point of anticipation builds is that there's a very good reason why this is a big problem for markets, because we are at the all-time highs since stock markets were coffee houses in London in 1603. So that $75 billion is underwritten by Goldman Sachs, Morgan Stanley, Bank of America, Citigroup, all the big names, right? 23 banks involved in book runners. These guys do not want any of those shares left on their books after the IPO.
No.
Because
and you mentioned sorry.
No, carry on.
Well, I was going to say, you mentioned seven.
Yeah, you go ahead.
You mentioned the seven other IPOs, and you mentioned that number and those bankers. Surely that's going to affect market liquidity.
Well, I'm sure it will. But Wall Street will do what Wall Street does. So they will be out there selling it like crazy because they don't want to have all of those stocks on the books, especially when the lockdown period ends, where insiders can sell, which is normally a month or two later. So they will not want all those stocks on their books at all-time highs. So you're going to see a frenzy of euphoria.
Yep. And so you're talking about the financial institutions not wanting having them on their books. What does that mean for a retail investor then?
Well, they will be going gangbusters trying to sell these IPOs. Massive amounts of advertising, marketing. The world and his dog will be talking about it. Lots of social media, etc. So Goldman Sachs is the underwriter. So they will not want any to have to buy any of these stocks at an all-time high, especially with all the other ones coming
and
as well. So
exactly. That's why I sort of get curious about market liquidity at the end of the day, and then the market to be able to take on board those new IPOs, which is been a change of their previous approach. That is, those companies. Previously, you were talking about buybacks. Now we're talking about cash in the market. How is
well,
that change sort of going to also impact?
yeah, so let's say since COVID, to name one point in time, Amazon, Facebook, Meta, sorry, should I say, all of those guys, all they do is buy back their own stock to drive the price higher because,
Mm,
of course, they have to look after their shareholders. And the market is driven up by this lack of liquidity because
mm,
they're the actual buyers of the shares. So we've had that for 5 years, and now we've got the opposite happening where new shares are hitting the street. And investors have got to absorb all those. So, will there be a lack of liquidity there as well? I think that at least the SpaceX one will go really well. But IPOs, it's all, rah, 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 and then a week later the stock price collapses.
yes.
Not always, of course. But certainly it will be a point in time to measure because the metrics of the market is we're short of stock, so we're very long of stock. And all of this stuff has got to be distributed in the next few months. So it's going to be fun and games.
Sounds like it. A couple other things in your press release. Kevin Warsh's first Fed meeting was today. That must have been, or I'm not sure whether it's actually been held, but given the combined political pressures and interest rate cuts, how do you think that has all gone or will go?
Yeah, no, it's actually June the 17th. I've just noticed there was a 7 that was
Oh,
missed out
right.
from that.
Apologies.
So you will know all about that when it happens. Part
But
of what Wall Street is going to do is they're going to say, well, here we go, new FOMC, Trump's his boy, rate cuts are coming. Well, you better get along with equities. You can just see it happening.
yep.
So I doubt everything's going to happen on the 17th of June, but there will certainly be extended expectation ahead of it.
The other thing you noted, and going back to the war, price of oil falling,
Yep.
is this a sign of global inflation starting to reduce? And if so, what sort of time frame do you see that occurring?
Well, I don't think inflation expectations will be subduing. Whether inflation itself does, i.e., prices paid does, is a different thing. But certainly, when you see oil double in price, people tend to go out and buy things they need immediately, right? Because they expect prices to go up, so you might as well buy it while it's cheaper if you've got the money. So those expectations will be wound down as oil goes back down to 85. It's around 85 now, but
Yep.
it is lower and will probably stay lower unless there's a reason for it to go higher, which, as we're saying with the Iran thing at the moment, is kind of like on hold. No one dares do anything about it, it would seem to me anyway.
Yep. Is there anything else out of that release that you wanted to discuss before we move on to your charts?
Well, this week we're expecting non-farm payroll, which is always fun, and jobless claims as usual, EU CPI, and there's a lot of talk at the moment around GDP. Canada's in recession.
Yep. Yeah.
Negative French and Swedish GDP. UK is very low. Australia's not doing too badly, but the United States even is like 1% or something like that. So if we have inflation and we have little or no growth, that's called stagflation, which is the worst of all situations.
Exactly.
So that would appear
I
to be what we've got
actually
at the moment.
highlighted that. Yeah. So,
Yeah,
albeit we have all this anticipation building in the equities markets and the like, at the end of the day, the global economies aren't traveling that well.
that's right. That's exactly right. And very difficult to do anything about stagflation because whatever you do is wrong. You hike rates, you crash the economy.
Yep.
You lower rates, you get more inflation.
Yep. Yep. So,
So what can Kevin Walsh do? Nothing.
yeah, not a lot. Absolutely.
No.
Okay. Be interesting to see what those charts now look like in the past week. We'll move on to those.
Yep, absolutely. Here we go. Let me know when you can see it.
I can see those, thank you. Bitcoin.
Okay, going from left to right, crypto first. Bitcoin's had quite a nice run up. Hit the 200-day moving average like a brick wall and has just gone lower since then. Ethereum, same story. It just doesn't look particularly exciting. Here's oil. This is spot Brent at $96. In reality, we are trading this parallel channel here and have been since the big day, 9th of March. And I drew this in last week, but interestingly, 3 days ago, it hit it and bounced exactly. But really, this, no matter how squiggly a line I draw, the reality is that oil has stopped going up. So we're on hold there and we're at the lower end of the range. Gold has been quite volatile in that we've had some good days and some bad days. Here we've touched the 200-day moving average again, but it's really not doing too much. Same with silver. You can see it's not doing anything. It has the occasional spike or up or down, but it's, you can say from this point here, which is pretty much where we are now, it's been the same for the last month or so. The dollar against other currencies, the Dixie, is in an ascending parallel channel pretty much. Let's see where that goes. If it breaks lower, it's going a lot lower. So currently, it's been going down the last few days, but dollar yen has been going up. So this is where 160, as usual, where the Bank of Japan sold all those dollars.
Sold off.
And it's, half a yen away from it now. So nothing.
Yeah.
So currencies are pretty stable. This is the offshore yuan, which this is dollar yuan, should I say. So if it's going down, the yuan is strengthening. So you can see that it's been strengthening since, if I can get my cursor on that line, 9th of April, pretty much solidly every day. So as the West does what it does best, which is create havoc, has money been piling into the yuan, or has the dollar been going down against it, is the question. So a lot more trade going through the yuan at the moment. Lots more buying of gold underneath the radar by central banks, even though the spot gold price hasn't moved.
Yep.
Gold and yuan are the future for China. So they want to de-dollarize. They'd much rather settle trades in yuan for gold if necessary. And they have recently, or not recently, in the last few years, set up exchanges around the world, gold exchanges, precious metals exchanges, I should say. So given that the yuan is meant to be in a peg, it's interesting that the People's Bank of China have let it appreciate so much. There's hardly any press about this, but I think it's really interesting to see what occurs with that. Let's wait and see. Interest rates, 10-year, didn't mean to do that. Meant to do this. So we had the big spike up in US rates, and that has come back down again as oil has gone lower. But the real action is in these stock markets where where you can see that the Nasdaq, what a crazy ride it's had. So this is 30th of March, so that's not that long ago. So let's say it was two months ago. 2 months ago exactly, and you can see that in 2 months, if I can get my cursor to, we've gone up 30% in 2 months. That's nuts. A lot.
Yeah.
And now,
and on top of that, you've got those IPOs coming on board.
Many trillions of dollars of value in IPOs to go on top of this.
Yes, so exactly.
Right. So what's going to happen? Well, I would suggest it's going to be a lot to digest. So even that's Tesla. Sorry, I was going to go and show you the Dow Jones. So even the Dow Jones is doing the same, right? So the industrial stocks, which are not meant to behave like that. So everything is going into keeping these equities going higher. This is the S&P. Other stock markets are nowhere near as positive. I'll just show you the ASX just for the sake of argument. So that's definitely not as positive. So money is getting sucked into America for these IPOs and everything else that's already happened.
So the drive in the market and the pricing of the shares in the IPO, so where do they sort of fit in there? Because ultimately there's a price that they're going to list at, and is that above or below expectations at the moment?
Well, the answer is we don't know because they haven't put in the listing documents yet. So they won't do that probably till a week before or even later. And they're guessing when they do it. But their underwriter and book runners will tell them how much they're going to pre-sell of it up to a certain price. So when you've got 23 of the biggest banks in the world hitting the street selling this to institutional investors like crazy, you're going to get the feedback to tell you what price you got to list it at. Because I can't even remember the number now, $2 trillion, mum and dad aren't going to be supplying that. This institutional investors have got to take this up, and those banks will be telling SpaceX what is a good price to list at so we can shift all of these shares.
Yep. Very interesting. Okay. Anything more that you wanted to add?
Not really. Comrade Powell was speaking yesterday about institutional independence and democratic protections of the Fed, specifically cautioning against mounting political pressures on the Fed. Well, that's kind of a bit rough, really, seeing as he spent the last 5 years being political. So
yes, that's one thing. Is he wiping his hands or something?
Care, right? Yeah.
No.
Pontius Pilate. The market doesn't care what he says, right? Because he's gone. They absolutely don't care. But it's interesting that is this the start of the internal friction as he stays on the board?
Yes. Well, he's trying to distance himself, and while Kevin Walsh may come under more pressure, and he'll go, well, he's the guy who has to deal with it, and I never worried about it. Sounds a little different to what you just said. Yes.
Hospital pass, we call it in rugby.
Exactly right. All very interesting. Okay.
Yeah, so that's really that this week. It's just watch out for this euphoria coming because all of the investment banks in the world need it.
It'll be interesting to see how that pans out over the next couple of weeks once they roll those out. And are all 7 to occur within the same sort of time frame, within a month or so, or what's the outlook there?
Yeah, so normally, let's try and find where it's gone now. Normally you'll find that the big one will go first, and if it goes well, the others will come in really quickly. If it doesn't go
Yes.
well, they'll put it back.
Yes,
So
or
they
decide
really
not to
need
proceed.
SpaceX to go well, right? Yeah.
Yeah,
No,
exactly
exactly.
right. Exactly right. Yep.
So everybody needs SpaceX to go well,
SpaceX
including the US administration, Federal Reserve. Everyone needs it to go well.
needs it to take off and not crash and burn. Is that the thoughts behind that?
Is that a joke, Don?
Yes, it was.
Congratulations. That's
Thank you
right.
very much. Very good. Okay. Well, thanks again this week. And as I said, I'll look forward to how some of that will play out. So that's another wrap of this week's Limit Up podcast. This and previous podcasts can be located on the Siberia Capital website, or alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thanks again, Ian, for this week's, and thank you to everyone listening in.
Thanks, Don.
Thank you. All right, bye.
Cheers.